Right. So CA and company CAs have been appointed as auditors of ZXC. The company has obtained the license from the state central government for itself to promote the sport of hockey in the rural areas of India. The company's average annual profit was estimated to be around 50 lakh. This profit would not be distributed as dividend to the shareholders. It would be applied towards the objective of promoting the sport of hockey in the country. During the course of audit 31-32, the following observations with respect to the company were made by the auditors. The company was not maintaining proper records for the PPE maintained by it. The value of the fixed assets amount to 1.5 crore approximately. Physical verification was not carried out at the regular interval. The last verification was done in 2030. As a result of the observation, the auditor decided to report the same in Karo. However, the management of the company was against the decision of the auditor and insisted that the observations should not be reported. After several discussions between auditors and management, the CA decided not to report the issue. CA and company were also acting as the auditor of another company, LS Limited and KD Bank Limited. And during the course of audit of the LS Limited, there was a difference of opinion between the management and the auditor as to which among the following areas are the areas which are the auditor should take into account to determine the audit matter. Effect on the audit of significant event or transaction that took place during the year. Assess areas of high risk as assessed and reported by management's expert. Significant auditor judgment related to areas in the financial statement that involve significant management judgment. Okay. And during the audit of KD Limited, the auditors and the management had a certain difference of opinion as to the amount and item which needs to be disclosed under the heading of the contingent liability. However, apart from that, the auditor observed the following. 59 agricultural loan accounts guaranteed by Government of Delhi amounting to 29 lakh were overdue for more than 2 years. 73 guaranteed by Government of India agricultural loan accounts amounting to 25 lakh were overdue for more than 2 years. Six corporate loan accounts guaranteed three each by Government of India and Government of Delhi amounting to 25 lakh for each company were overdue for a period of more than 3.5 months. And based on the above facts, answers were following. Is the decision of CA and company of not reporting the issues of ZXC and Caro justified? If so, what could be the reason? Right. So what does it say? It is a company which has obtained a license from the central government for promoting the sport of hockey in the country. That means it is a Section 8 company. And once a company is a Section 8 company, RO reporting not applicable. Okay. So no CARO is applicable to ZXC and hence the same needs to be reported under clause 1. Yes, CARO is not applicable to ZXC and hence it need not be reported. No, as per 240, the auditor is to maintain professional skepticism when it comes to issues in the areas of fixed assets and the same has to be reported. Why 240 came in the picture, God knows. As per 320, the auditor, after taking into account the materiality of the issue, he may either choose to report or not to report on the same. What do you think about the auditor? Nothing. Yes, so CARO is not applicable and the same need not be reported. What is the total amount of loan which should be classified as NPA by the KD Bank? Okay. Right. So one we study, central government guaranteed advances need not be treated as an NPA, provided the guarantee is not repudiated when invoked. However, this does not apply to the state government guaranteed advances. Right. So first one, Government of Delhi. So that's state government and it's overdue for more than 2 years. So is 29 lakh to be deemed as an NPA? Yes. Next, guaranteed by the government of India. So then this is not to be taken. It's a central government guaranteed advances. So need not be treated as an NPA. Next one, six corporate loan accounts guaranteed three each by Government of India and Government of Delhi amounting to 25 lakh for each company were overdue for more than 3.5 months. Again, Government of India, central government guaranteed advances, no need to treat it as an NPA. But Government of Delhi, you have to treat it as an NPA as it is overdue for more than 90 days. So now it says six corporate loan accounts, three of Government of India, three of Government of Delhi, amounting to 25 lakh each, right? So 25 into 3, that is your 75 lakh is again going to be an NPA. Right, so NPA of 29 plus the 75, right? So that's coming to 104. Okay, right? So So 79 lakh, 100 lakh, 204 lakh, or 104 lakh, it is the 104 lakh. Okay. Which among the following has to be reported by the auditor as a contingent liability of KD Bank? So guarantee given by bank on behalf of the customer located in Myanmar, a percentage of the total bills purchased by KD Bank, claims against the bank not acknowledged as debt is a contingent liability, which is acknowledged as debt is not a contingent liability, it is provision. Unpaid salary of 5 lakh to 5 staff of KD Bank who are currently undergoing a court trial. Right, so again, unpaid salary is not a contingent liability, it needs a provision. Right, so had it been claims against the bank not acknowledged, it would have become a contingent liability. Percentage of total bills purchased by the bank, so bank has to make the payment. If the bill they cannot, get it recovered from the customer. Guarantee given by bank on behalf of the customer located in Myanmar, yeah, that is the bank guarantee issued, so that is the contingent liability. And as per 701, CAM, communicating key audit matters, which among the following areas should CA and company take into account in determining key audit matter? Effect on the audit of significant event or transaction that took place during the year, areas of higher assessed RMM and reported by management's expert. Ayyo, they've done a drafting error over there. Then areas of higher assessed RMM or significant risk, yes. But here unnecessarily they have put the management's expert. And significant auditor judgment related to areas in the financials that involve significant management judgment. Yes, again, that is could be how you determine the CAM, right? So what does it say? 1 and 3, right? So 1 and right? So that is our case study. Yes, next case study over there.